Hi there, Sam here from EasyTradingSignals.com, and I posted an article about the most profitable candlestick pattern, and I got some questions about that, and I realized that I didn't do any sort of a video walkthrough, so that's what I'm going to do. But if you haven't read the article yet, it's on our website, EasyTradingSignals.com. And at the moment it's on the recent posts, most profitable candlestick pattern that you need to know about. Alright, so the most profitable and powerful candlestick patterns are these ones: harami, engulfing, hammer, piercing, dark cloud, and shooting star. The problem is that for a lot of traders it's often difficult to remember all of these, and there's literally like over 30 candlestick patterns, but not all of them are really effective. These ones are the most effective ones, and there's certain conditions under which they are particularly powerful. So that's what we're going to look at. The article actually shows you how this works and how it all collapses down to a single pattern, and that is the hammer. So what I'm referring to here is combining two candlesticks into one. Now, if that sounds difficult, it's not really all that difficult. So see if you can follow along with me, and then we'll hop onto a real chart, a live chart, and you can follow along with me and see what I'm doing there. But let's look at the harami, right? So a candlestick is made up of the open, close, high and low, right? So if this is a bear candle, right, we have the open at the top there, then we have the next candle close here, because it was a bull candle, right? So open, close. So instead of looking at one candle, we're taking two together. Open, close, and if you put those together and you take the highs and lows, look at that, you've got a hammer. And the same with engulfing. Open, close gives you a hammer, and of course the hammer. What about the piercing one? This one always got me previously until I actually figured out how to do this. Once again, open, close, hammer. Easy, right? And the same goes for the reverse. So your reverse harami, open, close, it's a hammer or shooting star, but hey, it's called a Thor's hammer, plummeting down. Engulfing, same thing. Open, close, hammer or shooting star. So inverse hammer, shooting star. Dark cloud, same thing. Open, close, there you go, hammer, shooting star. So it really means that if you look at these patterns together like that, it's super easy to identify a hammer or a shooting star. And they're really powerful when they occur close to Bollinger Bands, the top or bottom of a Bollinger Band. So let's look at a chart and see if we can find some of these. Now, often, these patterns are pretty short-lived, in the sense that you might just get a bar or two following this particular signal that will actually obey the rule. So you need to be careful about it, and what I do to kind of make it a little bit easier excuse me, is I add something like stochastics. I like 5, 3, 4 on stochastics. It smooths things out a little bit more for you, and I kind of keep an eye on that, together with looking at Bollinger Bands, which you can put at default 20, that gives you a really good setup. So just a quick word on Bollinger Bands. So Bollinger Bands basically gives you the standard deviation of where you're trading. So what that means is it tells you whether the market is currently in a position where it hasn't been during the last 20 or so trading bars. Okay, yes or no, that's kind of what it gives you. It's not 100% a true standard deviation, but it gives you a kind of a good feel for where the market is heading and whether you're in territory where it hasn't been trading recently. So one or two things can happen in that case. It can either bounce off on it or continue. You might say, well, duh, that's always the case. But when it comes to the outer bands of a Bollinger Band, you have a particular circumstance where you can use this to your advantage, and that's what you're trying to do. You're trying to use the market to your advantage instead of just getting crushed by it, right? So without further ado, let's take a look at this. So we're looking for hammers close to the Bollinger Bands, or we're looking for a hammer that we can construct close to one of those two. And at the same time, it would be preferable if our stochastics actually bore that out for us and told us, yes, it looks like we're heading in the right direction. So what I mean by that I mean that the stochastics should be preferably close to 80 or 20, and it should be the same as the actual signal, so positive and negative. So let's look at some examples. So I'm going to try and zoom in here. Okay, so this is probably not ideal, but hey, it's right in front of me. So let's draw in some lines over here. By the way, that looks like a nice little hammer potentially forming over there. But let's do this. I'm going to draw in here. Okay, so start, right, end. So here we have ourselves a little hammer, and true to form, the next one actually was an up bar. But we can see over here on the stochastics side, although it was relatively low, it really didn't give us any indication of where it was heading. So let's just turn that off. Okay, so here's another one. So here we have clearly there you go, that's clearly a hammer, and it's cutting through the bottom of the Bollinger. Stochastics down here is fairly low, so I'm expecting this next bar to move up. So we can maybe just indicate that over here. Let's see if I can draw something in. Oops, there's a lot of arrows now. There we go. So we call that one, right? Okay, so let's look at another one. Okay, so there's another hammer, a little bit of a fat hammer. This one over here. A little bit of fat hammer, but it did head down. So that's good. And also here the stochastics was a little bit dicey, but you can see that there's a fairly narrow trading range, so it's not a lot of power in the market, so it obeys. Okay, so here we have a couple that I would call problematic, but if you look at your stochastics down here, which should keep you out of trouble, you can see that it's fairly flat. There's no real energy in the market that would indicate. I must say this one here I probably would have taken, but hey, it's not perfect. It just gives you really good indication. Alright, so People might say, what about this? This is a shooting star, right? This one over here. This is a shooting star, right? Isn't it? Yes, it is, but it's in the wrong way, and it's at the bottom of the Bollinger. We want this tail to be the other way around. So I would not have taken this, even though the stochastics here shows that it's negative. It is still at the close to the bottom, so it's close to being oversold. So I would have ignored that. This one is more of a potential one, although it doesn't conform with exactly what we're looking for here. So I'm going to skip on both of those. Here we have another one. Look at this. So these would have been difficult to spot if you didn't know about this little trick. So we have open, close, right? So open and close. There you go. And we have stochastics coming out of oversold and heading up, and the market agrees with you. Right, so that's good. Let's move on. Alright, so here's another one. We can see here that there was some resistance on this level over here. See, there's some resistance because both of these kind of end up in the same spot. And here we have open, close, right? So once again, and the market heads up. And at the same time, we have agreement here on the stochastics. So once again, another good one over there. This one should be a no-brainer, right? Stochastics good. It's at the top. It's overbought, and there we go. A little thin hammer, but nevertheless, the market heads down quite well. Then here we have another one. We have a low point here on stochastics, and remember our little trick: open, close, oops, and it's close to the bottom of the Bollinger, and it's heading up. So once again, another good one over there. So this is actually pretty cool because you can keep on doing this whole freaking day long, and you'll keep on seeing this pattern popping up over and over and over. And look at this little nice one over here. It's completely outside, and we have stochastics in a good spot. That's just a clear hammer, and it heads up. Alright, so it's pretty cool, and this pattern keeps on repeating itself over and over and over, and it is really useful to see this on a live chart and know how to trade. So I hope that has helped you, and that you'll be able to use that in your live trading, because it's always a good idea to keep an eye out for these type of patterns. And as you can see over here, we call this correctly, and this is clearly a win. So hey, I hope you enjoyed that. I hope that helps you in your trading, and as always,